we were discussing about the Nostro accounts and Vostro accounts. Banks and primary dealers who are participants in the foreign exchange market and then the money market do maintain Nostro accounts and Vostro accounts. Now, in terms of rupee transactions, the Nostro account is always accounts are with the central bank. They can have Nostro accounts with each other bilaterally, but the main accounts to participate in the foreign exchange market and the money market are maintained and managed by the Central Bank Domestic Operation Department, DOD. And the Nostro accounts for foreign currency accounts, foreign currency transactions, mainly by licensed commercial banks who are authorized dealers, empowered or delegated by the Exchange Control Department or Foreign Exchange Department, Central Bank of Sri Lanka. Those foreign currency Nostro accounts are maintained in those countries where the legacy currency is the currency of dealing. Example, US dollars in New York, sterling pounds in London, euro in one of the euro countries, Germany, Frankfurt, Paris, or any other country, and Japanese yen in Tokyo, Singapore dollars in Singapore, likewise. But however, there are some instances where the US dollar accounts are maintained in another bank in Sri Lanka or another bank in London or any other country as well. So the main point that I want to emphasize here is that to make payment, to send payment instructions, and to receive payment instructions or receive messages are communicated through SWIFT. In LKR, payment and receive messages are sent to the Central Bank Domestic Operation Department via SWIFT, namely the RTGS, real-time cross-settlement systems, or in the case of security, it is scriptless security settlement system or SSSS. The main purpose of Central Bank Domestic Operation Department maintaining rupee Nostro accounts for banks and primary dealers is to facilitate bilateral settlement and ensure that who deals in foreign exchange or money market do possess adequate funds, adequate balances, or other arrangements with the central bank to cover when there is a payment with adequate balances. Just imagine if one bank or primary dealer, after having sent a message for payment, if there is no balances available or arrangements with the central bank to pay that money to a counterparty, that will be a total breakdown of the entire system, rupee payment and settlement system. Excuse me. So therefore, central bank has made a lot of rules and regulations and guidelines, and then especially a few parliament acts as well, payment and settlement act, and so on and so forth. With regard to maintenance of compliance to the guidelines and directions, that the money market and the foreign exchange market does not collapse. They have to function because that is the starting point of the interest rate curve or yield curve in the case of rupee transactions, and the exchange rate, the primarily wholesale market, established with the interbank foreign exchange market. And when it comes to forward 1 week, 1 month, 3 months, 6 months, 1 year, and so on and so forth, especially in the interest rate curve, the beginning is the overnight market, and they are after any supply and demand factors will influence the or extend the curve to 1 week, 1 month, 3 months, 6 months, 1 year periods. Therefore, any changes that we see through supply and demand in the short end of the curve, overnight, and the spot and 1 week interest rate curve or the foreign exchange rates will influence or seep through, that impact will seep through to the rest of the periods when you draw up a curve. So therefore, it is extremely important for the central bank or the domestic operation department, and in the case of foreign exchange, international operation department, IOD, to maintain the macroeconomic variables to suit the short end of the curve in the foreign exchange market and in interest rate markets yield terms. Very smooth maintenance or transaction has to happen. So therefore, there are a lot of guidelines for the participants, especially the licensed commercial bank, licensed specialized banks, and primary dealers who are participants in the local market through money brokers or directly. There is a lot of emphasis and directions pointed at them to maintain those recommendations or directions in their offices as well. So the compliance to those regulations is paramount, and at the same time is continuously monitored and checked by the central bank, either bank supervision department or non-bank supervision department, in some instances public department, and basically the officers of foreign exchange department, IOD and DOD. So therefore, the performance of the markets and individual performance of the particular participant, whether licensed commercial bank, licensed specialist bank, or the primary dealer, is affected if the rules and directions, guidelines, the laws enacted through the parliament are not adhered to. Right. So when it comes to communication of the payments messages, ascertaining the requirement amount of funds and ascertaining time funds are required, value dates, transferring excess funds or selling for LKR, all that is material. No single messages is expected to be generated without funds or without arrangements. Bilateral SWIFT message, payment message communications are SWIFT MT202 for interbank transfers. Say, for example, if Bankers Loan has to pay People's Bank, the SWIFT B code is material. In the case of Bank of Ceylon, the BCEY LKLX, and in case of a National Bank, HBLI LKLX, and so on and so forth. Each member, SWIFT member, is identified by that unique SWIFT address, like in the case of email address, and the arrangements at the office where the SWIFT connection is given has to comply to those regulations primarily by SWIFT organization itself. Then the regulations and directions by the central bank to keep the message communicator SWIFT unharmed, meaning not hacked, not no, there are no viruses, there are no the protection is basically by password encryption and firewalls and various other mechanisms. Communicating through SWIFT is costly because to obtain a SWIFT membership from the SWIFT organization based in Belgium is extremely costly. High cost annual membership fees is very high, and for each message, depending on the size and length of the message, the cost attributed to the originating bank of the message is lowest could be 40 rupees and highest could be about 1,000 or 2,000 rupees in rupee terms. And the bill from SWIFT comes basically in the currency euro to be settled each month. And the SWIFT organization operates as a cooperative society where the members, banks or any other financial institution who has a SWIFT membership, this cooperative society has a lot of regulations, like when you list the company share in the stock exchange, Colombo Stock Exchange, there is lots of rules and regulations. To that extent, Colombo Stock Exchange is a regulating arm as well. So likewise, to obtain a SWIFT membership, there are lots of rules, regulations to protect the SWIFT system. And by mere granting the SWIFT membership itself is an achievement. Obtaining SWIFT membership is an achievement because to operate as a bank or primary dealer, SWIFT membership is one of the primary requirements. Should be able to communicate the payment messages and then receive messages. There are a few unique features with regard to SWIFT. SWIFT expects extra precautions by each SWIFT member at their own offices to protect the SWIFT system. So, for example, when there is a SWIFT connection to a computer in a bank or primary dealer, SWIFT expects that room to be locked and anybody entering should be with proper password to enter. Secondary is that the computer terminal should be password protected, and anybody signing on has to put his or her password and enter, then it is recorded who operated the terminal. Thirdly, the menu for each operator, depending on the business that he or she is expected to carry out, there is menu control. For example, treasury back office person will be given only a certain number of message types to operate. An imports department will be given only a certain number of message types to operate. Export department will be given only a certain number of messages to operate. So therefore, Swift has segregated all the message types into various categories. Message type MT 202. Firstly, messages starting with usually three digits. Starting with 0 is system related messages. Then Swift messages starting with 1 is customer related messages. For example, Swift MT 103 is a customer payment. One bank is sending to another bank certain amount of money to be credited to a customer account. That has to go through Swift MT 103. Then 200 series is inter-organization or inter-member Swift member fund transfers, interbank fund transfers. Example, Swift MT 202. Then Swift messages starting with number 3 digit is foreign exchange related transactions. Then Swift message starting with number 5 digits are securities related messages. Like what we have enlisted here, these are all treasury bills, treasury bond related messages, securities related. Only the treasury bill or treasury bond can be transferred to from one party to the other part, from one bank account to the other bank account. Messages starting with number 7 digit is trade finance, international trade related messages. For example, MT 700 message is the letter of credit. Usually the longest message is letter of credit, opened by one bank and transmitted to another bank in favor of another bank. A customer maintaining an account with another bank, the message has to go through Swift MT 700. Then Swift MT 900 series is general type of transactions, messages to be sent. So likewise, and the innovation or the planning is so great that when Bank A sends a message from its computers or terminal to Bank B, first of all, Bank B identifies from the Swift code from which the Bank A Swift code, where the Bank A identity is noted, identified by the Bank B. Messages are sent by Bank A, is very well identified. So it's on record. Then if it is a customer transfer, Bank A would send Swift MT 103 and the Bank B's computer will identify the 103 message received from Bank A, and it is 103, therefore it's a customer transfer. Bank B's computer will automatically, without human intervention, it will identify and look for the field in the message where the customer account number and the name and the other customer identity is available in the message. And then identify the customer account in which branch, in which location, and will identify the currency code, say LKR, and then credit the amount of in the amount box or amount field to the particular customer account automatically without manual intervention. The computer's core banking system of the bank B can be programmed to identify the process that SWIFT message MT103 sent by bank A to bank B automatically without manual intervention, without human being, staff member getting involved. That is called straight-through processing, STP, straight-through processing. So thereby, a lot of manual errors are avoided and a lot of cost, manual labor costs are avoided. Only the problem is that if the SWIFT MT103 message is populated with incorrect data, supposing the account number, if there should be 8 digits, there are only 7 digits, or there are account number digits are mixed up or something like that, or the account number and the name does not match, then the message is thrown to a queue until some staff member is available to look at the erroneous messages queue and then correct the, after speaking to the sending bank A, they will correct the message and then enable the computer to process the message to the correct recipient account, customer account. For that, manual intervention, banks are in the practice of charging the sending bank A. There will be a bill from bank B to bank A, manually corrected message, $50, like that. So just imagine the environment, thousands and 100,000 messages from large banks being sent and received. This way, SWIFT being enabled to process, to machine read and process the messages automatically, the advantages, the cost saving, and the speed and the efficiency is extremely important. And then I chose these few messages for you to know a specific thing. Basically, in Sri Lanka, SWIFT is very important in the wholesale markets, foreign exchange and money market, because our RTG system, message carrier is SWIFT. Scriptless security system, SSH system, message carrier SWIFT. And various other latest systems also use SWIFT as message carrier, like SEFT and other payment systems. Only SLIPS, Sri Lanka payment system, is Lanka Clear innovation. But there are other payment systems which operate through SWIFT as a message carrier or transport agent. Now, when it comes to treasury bill, treasury bond market, repo market, sale and purchase of treasury bills, treasury bonds, MT540 message is sent to receive free without payment. Now, when a treasury bill is transferred from bank A to bank B, or transferred by a customer of bank A to a customer of bank B, or primary dealer, they send MT540 requesting the central bank computer maintained at the public day department, scriptless security settlement system, a receive free message. What does that mean? A treasury bill is transferred without a payment, without a corresponding payment. So that is receive free. That is MT540. And the other bank or the primary, the other counterparty has to send MT542 deliver free, receive free. And those two messages must match with each other. The exact ISIN number of the treasury bill or treasury bond and the amount and the beneficiary as well. So then when the receive free and deliver free MT540 and 542 match with a single transaction, scriptless security settlement system or SSS system at the public department execute the transaction without human intervention in their computer. So the opposite. The next example is 541 and 543. Receive versus payment and deliver versus payment. Receive versus payment and deliver versus payment. Another transaction where treasury bond have been sold from bank X to bank Y. Bank Y sends a message, receive versus payment. Because bank Y bought the treasury bond from bank X. For 541 message has to go. Then bank X, since bank X sold the treasury bond, it has to say deliver versus payment. 543. So 541 and 543 should match for that particular transaction. Treasury bond ISIN number, the amount of the bond, value of the bond, and the beneficiary, rupee beneficiary, as well as the security beneficiary has to match. If all those match, the transaction will be automatically completed at the central bank SSS computer, and the rupee payment will be channeled through automatically through RTGS system, where the 541 sender will pay the 543 participant, because when treasury bond is delivered, it has to receive payment. When the treasury bond is sold, the payment has to occur. So there is a interconnection between the SSS system and the RTGS system. So these things has to be borne in mind when you transact treasury bill, treasury bond, repo, reverse repo transactions. Any questions, please? So that is the technical innovation that all the participants of the, especially money brokers, should be aware that when you arrange a transaction for a bank or a primary dealer, these things are happening without a knowledge amongst the banks or primary dealers who are party to the transaction. Then deal confirmation. Deal confirmation, now the money broker will send the deal confirmation to the lender and the borrower and seller or buyer instantly as soon as you execute a transaction, you arrange a transaction. Similarly, the bank, licensed commercial bank, licensed specialist bank, or the primary dealer who are parties to the transaction, the two parties, has to exchange a deal confirmation originating from their respective back office. Because, as we explained the other day, As soon as the front office executes the deal, they input the transaction to the system, computer system, and stays in a queue without going to the books of the bank until it is verified by the middle office and passed on to the back office. The back office, when it receives the deal, which is staying in a queue pending approval by the back office, in most cases, there are 2 levels of approval at the back office, and there can be some banks 3 levels of approval. At the first level, they pull out from the queue and verify the transaction with the deal ticket or whatever the documentation received from the front office outside the computer. And then at the first level, those facts are verified, the amount, the counterparty, and so on and so forth, the currency and the time of the execution, and the market rates and various other factors. Then the second level of, at senior level, second level of approval, once the first level is approved or passed through, the queue goes and stays at the second level of approval. And at the second level of approval, again, a thorough check is carried out. And then with this password, it will go through. If there are third level of approval at the most senior level, manager level, or head of back office level, when they go through the transaction once again with the knowledge and experience, the transaction goes through to the books of the bank under the balance sheet. Assets and liabilities are changed with the third level of approval. And at that point, the deal confirmation is generated, addressed to the counterparty. In case of sale of foreign exchange, to the buyer's bank, back office. In the case of purchase of foreign exchange, the seller's bank, back office. And mostly these days, these deal confirmations are exchanged through email because of cost factors. But large multinational banks, again, deal confirmations are sent and received through SWIFT. And likewise, money market lending and borrowing, also deal confirmations are exchanged. And thereafter, brokers' confirmations are also verified by the back office, along with the counterparty confirmation. And they are filed in, if they are received through email and soft form, they go into a software file. In the case of hard copy received, they go into a physical file. These confirmations are extremely important because they are the legal document of transaction. Any dispute, any non-receipt of funds, or funds received delayed, not on the value date, interest claims, has to be based on the litigation or claim, has to be based on the deal confirmation. Because most of the interbank foreign exchange market and then money market transactions happens through the telephone, voice recording is material. But when it is happening through Reuters or Bloomberg, there are printed material source documents, printed or archived messages. So they need to be protected as source documents at least for 6 years until the prescribed, central bank prescribed, it is prescribed by a Parliament Act that the source documents must be preserved for 6 years. But however, most banks and treasury departments pass on those documents, if they are hard copy, to an archiving department or stores after the funds, basically after 6 months or so, be recorded on a date wise. If by any chance it is required to be retrieved later on, to be able to retrieve them from the archived place. So recording and archiving is extremely important when there is a dispute. Sorry. So it is extremely important that it is archived, so that because if there is a court case or litigations happening, there should be source documents for proof of transaction. Then daily verification of inward confirmation and daily verification of outward confirmation is a prime job at the back office. If there is a variation, if there's a dispute, follow up and call for in case not received as well. Then the settlement process, most treasury back officers effect payment for value spot. As we discussed at the one of the previous discussions, value spot is critical because most of the cash flows, rupee cash flow or foreign currency cash flows are covered up to the spot value date. And every day the maturity lists, maturities of transactions are generated or attended to or focused on the spot day maturities. And the treasury back office make payments for each foreign currency sale items or money market lending items on spot date. Example, if today is Tuesday, Thursday's maturities are handled or focused today. Today is 27th, Thursday is 29th. Because any dispute in between can be resolved. The spot date concept has evolved. Spot date concept has evolved because of this cumbersome procedure of arranging payments and receipts of funds. The nostro account maintenance comes under Treasury Department because of this factor. The spot value date has to be focused in managing funds. And then payment messages, recording and archiving of payments and value dates of forwards and etc. also are very important for Treasury back office. Now the core banking systems look after all the difficult areas, clerical work. Those days people of Treasury back officers used to do, now happens through computer applications and are linked to the core banking systems. So therefore, the operations are very smooth now. However, to prevent any forgeries, there are each bank's Nostro account details are exchanged through a different department called correspondent bank department. In other words, Nostro accounts and Vostro accounts management, administration is done by a correspondent banking department, a separate department. When I say management or administration, it is selecting a bank for Nostro account, selecting a bank for Vostro account, and various other type of activities with regard to the Nostro Vostro accounts, such as selecting the bank and then exchanging the signatories and then passwords. All that is happening through the correspondent bank, because if that task also is given to Treasury back office, there can be problems with regard to payments and receipts. With regard to payments and receipts. So therefore, this segregation of duties is very important to avoid internal frauds or external frauds. Any deviation from the exact value date will involve interest cost and bad reputation. When a bank has to make payment on a certain value date, the fund transfer has to go on the 2 days prior, and then the Nostro account maintaining bank has to process that payment to the beneficiary bank on exactly the value date. If not, the paying bank reputation is damaged. And then for the number of days delayed payment, there should be interest calculation, there will be interest claim. SWIFT MT 202 is used for settlement between banks that we discussed earlier. So those are the nitty-gritties of operations of treasuries, treasury back officers, which the money broker should know. Then the communication facilities has to be excellent. Real-time communication is necessary for treasury activities and money brokering. Financial information, market information, and foreign exchange and interest rate movements, changes and expectations has to be monitored. And banks and primary dealers do expect brokers to supply information by way of market reports to them to consider when they are to transact in the foreign exchange market or money market or treasury bill market or treasury bond market. Then Reuters, Bloomberg, Knight Ridder, Telerate, these are a few communication facility providers in the world. I think in Sri Lanka we have only first two. So therefore, the research reports and facilities, bank themselves do have individuals or departments who produce reports on financial information, market information, foreign exchange and interest rate movements, changes and expectations. But they do depend on support entities like money brokers to support them with the entities, with the information, research material. The speed of gathering information is crucial for optimum performance and prudent management of foreign exchange and money market. That is to say that the broker who would compile a report, good quality material report, and circulates among the banks and primary dealers will win the race. They will be trusted. They will be sought after for the transactions. Treasury managers are in need of fast, valid, clear, and accurate information for their decisions. Money brokers should be equipped to produce quality research reports. So that ends this presentation. And then we'll switch on to the next presentation. This is tutorial number 5. Can everybody see this presentation?
Yes, sir.
Yes, sir.
Yes, sir.
Thank you very much. Thank you. We discussed most features up to now on foreign exchange market. Now we are trying to discuss the money market. The money market is bigger business for all the money brokers than foreign exchange market, I guess. Money markets are central to allocation of capital, efficient distribution of liquidity among financial institutions, and hedging of short-term risks. Money market also play an important role in the evaluation process and in the large value payment systems where trades are settled. Now, I need to repeat again that most of the practices, procedures adopted in the foreign exchange market apply to money market as well, such as interbank limits and the dealing procedures, settlement procedures, the deal execution at the front office, and deal verification by the middle office, and also the deal processing by the back office. It's almost the same. However, there are two legs, mostly two transactions per money market transactions, mostly. When it comes to foreign exchange transactions, for outright transaction, there can be only one leg of transaction, but involving two currencies. But for swaps, there can be two transactions. And for money brokers, I'm sure you all have the practice of recording the transactions when it comes to foreign exchange forward transactions of maturities of each bank, and then money market transactions, maturities of each money market deal, and treasury bill, treasury bond transactions in each maturity leg. Because on the closer to the maturity of those transactions, you all can get back to the parties involved, the primary dealers, and then inquire whether there are connected transactions. Is that correct? Do you record those transactions and then peruse or follow up? No? However, the money market is very important when it comes to allocation of capital. Since the liquidity available in the market, there are some institutions can be in deficit, some institutions can be in excess. So the excess units, excess banks will have to lend in the market because they cannot leave the funds idle at the end of the day. And there will be strategies adopted by them to invest in the short term or long term or medium term. At the same time, the deficit banks will have a strategy to borrow on very short term, medium term, or long term money. So therefore, understanding those strategies is one thing, and which will facilitate efficient distribution of liquidity among financial institutions as they desire, as to cater to their cost of funds, cost of finance for their respective institutions, and hedging short-term risks like liquidity risk, because those institutions also has to look after the existence, sustainability of that organization. As I explained to you the other day, Treasury manages only about 10 to 15% of the total pool of funds available to those banks, because about 60 to 70% they would allocate for the depositors' funds and the shareholders' funds. They would allocate it for lending or long-term investments, long-term acquiring assets. And about 10% will go for other medium to short-term investments to cater to their business needs. Another 5 to 10% will be available with the Treasury Department to manage the liquidity on a day-to-day basis, to buy and sell foreign exchange, to lend and borrow in the money market, to invest in treasury bills, treasury bond markets, and so on and so forth. Because of the huge amount of customer transactions in various products, including international trade, imports and exports, and other major corporate loans and debentures and various other kinds of dealing of assets and liabilities, the availability of funds in the treasury market for the treasury guys will fluctuate. A good practical example is that I do remember at Bank of Ceylon when they were building the head office building in early 80s, and at HNB when they were building at the head office building at Dali Road, the original cost estimation, I can remember for HNB building, original cost estimation was about 5 billion, but ended up, when completed, it ended up at 8 billion. So therefore, when such large projects are undertaken by the respective institution, to complete the project, they would need funds. I was fortunate enough to be at the treasuries when Bank of Ceylon was building at the Bank of Ceylon head office, and HNB was building the HNB head office building. I can very well remember HNB was borrowing in the market on a daily basis when the head office building completion took place somewhere in early 2000s. So HNB was borrowing eternally. Although they had the liquidity surplus, in the money market, they were net borrowers. So those kind of information can be collected by the money brokers and then analyzed to support those institutions and also to support the other institutions to manage their respective excesses or deficits. So those are the hedging of short-term risks. Then money market also play an important role in the credit evaluation process and in the large value payment systems where trades are settled. The primary role of the money market is to raise long-term funds for governments, banks, and corporations while providing a platform for trading securities. Money market is a market for short-term financial assets that can be turned over quickly at a low cost. Because of this structure, the participants, licensed commercial bank, licensed specialized bank, money brokers, central bank role, and the RTGS system, SSS system, and other the operation mechanism at the DOD and the operation mechanism of the IOD and the public debt department of the central bank. Those are fine-tuned to achieve the best of money market. Basically, the wholesale money market has to be very smooth and effective. There cannot be failures. There cannot be system failures. There cannot be SWIFT failures. There cannot be inadequate balances in the accounts. There should be arrangements. So therefore, usually the skill and expertise and experience of the treasury guys and each participant bank or a primary dealer is very important, because the slightest failure in the money market, in the forex market or call money market or treasury bill market or treasury bond market, can bring the money market to a standstill. It can be a no-show thereafter if things happen erroneously or fraudulently, or the mechanisms fail. So much so that, as I discussed just a while ago, the exchange rate and the interest rate curves begin in this market, and the demand and the supply extend to 1 week, 1 month, 3 months, 6 months, 1 year markets from the money market. If there is big demand, if there's shortage of liquidity in the system and demand for call money market, and then other forces like if the participants are trying to sell the treasury bill, treasury bond investments and generate liquidity, generate cash, that means there's a sign that there can be lot of demand for rupee funds, and the interest rates can shoot up. On the other hand, when there are billions and billions of excess liquidity in the call money market, and the people are searching for investment avenues, supply of funds in excess can drive the interest rate market lower from the call market up to 1 week, 1 month, 3 months, 6 months, and 1 year. So that is a clear sign where the influence of the short end of the market towards the long end of the market. The money market plays a significant role in the economy because it drives the entire yield curve or interest rate curve. Or on the other hand, exchange rate is driven by the money market. It serves as a market for indulging in transactions for a short period, maintaining money-related equilibrium, that is to maintain a balance between supply and demand for money for transactions that are done for short period. So it is the central bank. Any question? It is the central bank who would conduct the monetary policy by first looking at the money market activities, excess funds or shortage of funds. A very good example is that in the beginning of or early 2020s, central bank brought down the interest rate rapidly, and they also reduced the statutory reserve requirement to 2% from about 5%, and then created huge amount of liquidity in the money market, the call money market, among the bankers and primary dealers. So therefore, they with other guidelines on the monetary policy, central bank directed those banks to grant moratorium for loans for the businesses who were affected by the COVID pandemic, and then they provided some sort of relief to those who could not function their businesses, who has to maintain their staff and workforce. And I think they originally extended it for 6 months, but later they extended it further. And from the central bank also, they granted some financial support to those intermediary banks to give facilities to those small and medium businesses particularly, and to some medium and large businesses as well. It is true that the banks had to take a certain hit on the debt moratorium that they were required to provide for businesses, but it was essential. Otherwise, the Sri Lankan economy would have suffered more and more. But however, with a little bit of innovation, for example, in the garment factories, instead of producing finished garments, they started producing the personal protective equipment, the garments required by hospitals to treat the COVID patients. And that export market thrived. And I know for sure some small and medium garment factories earn more money through export of PPE or personal protective equipment exported to Europe and USA and other countries. The switch from the usual pattern of business as guided by the government and the central bank. They were able to make ends meet with more adequate. I know some garment factory owners originally introduced the pay cut to all the executive staff, but later on they paid with arrears. So those type of success stories also matter, but central bank used the money market to propel those businesses when they were performing badly. So that is quite an example how the money market could be used to manage an economy or the downward economy, to raise the economy on a certain time scale. Importance of money market. Money market is a market for securities with short-term maturities up to 1 year. Banks, non-banking financial companies, and acceptance houses make up the money market. Now, in Sri Lanka, we do not have acceptance houses, but in the developed markets have. We'll explain to you in a later slide their particular role. Then the money market facilitates the transactions for short-term funds and maintains appropriate liquidity in the market. So we explained with the example just a while ago. So in Sri Lanka, we do have banks and finance companies, and those other organizations has to be organized in a developing country like Sri Lanka to achieve more wide varieties of participating institutions to support and develop the money market. Structure of money market. The money market consists of financial institutions and dealers in money or credit who wish to either borrow or lend. Examples of eligible assets include auto loans, credit card receivables, residential commercial mortgage loans, mortgage-backed securities, and similar financial assets. Now, you would wonder why I am bringing these words here. When you compare a developed financial market, using these credit card receivables and residential commercial mortgage loans, they construct money market instruments. They construct money market instruments. In fact, in the years 2007 and 2008, the subprime mortgage crisis is directly related to residential and commercial mortgage loans, which is a big business in the developed market. The so-called building societies and then banks, mortgage banks, huge institutions. Some institutions are larger than the commercial banks. When residential and commercial mortgage loans are granted by those institutions, building societies, to the prospective house buyers and so forth, and building contractors and maintenance developers, real estate developers, they bundle those mortgages into, say, $100,000 bundles or 100,000 euro bundles. Having granted those loans, they are assets in their books, and then they sell them in the money market. Say each $100,000 mortgage bundle can be sold for $98,000 with a $2,000 discount. That happens when the particular building society or the mortgage arranger needs liquidity or need to fund some more mortgage buyers. However much the building societies or mortgage houses change hands, the ownership of loans, the original mortgage buyer, house buyer, keep on paying their mortgage commitment each month when they draw salary. And occasionally one or two might fall off default, but there are mechanisms to pull them off and they manage separately. But however, up until 2007, this business was thriving. There were estimated transactions of so many times, 100 odd times, these mortgage loans bundled being changed hands from one institution to other institution to other institution, because they have been traded in the money market. So when this market grew to a certain extent, so-called mortgage houses and building societies had also given mortgages to subprime house buyers. Now, what are the subprime house buyers? Now, there are individuals who have a permanent job and secure income who want to buy a house. Those are prime mortgages. But when there are individuals who do not have a secure job, steady monthly income, they are called subprime. And then those building society and mortgage houses granting mortgage loans to such individuals are called subprime mortgages. Now, because of this subprime mortgage quantity growing into some proportion, more and more default had happened. The borrowers had not paid their mortgage loans because of rising interest rate curves in those respective countries and various other factors as well, and maybe rising inflation as well. This bundled mortgage loans being sold, the discount factor increases. $100,000 mortgage bundle was sold at 90,000 or 85,000 or 70,000, like that, or 60,000. Increase in the discount factor because the subprime factor has crept in. So therefore, at one point in time, the regulator, the banks had also had to intervene to protect those building societies and mortgage houses. They had to pump in money. You learned into the years 2007 and 8. The US government had to pump of dollars and pounds to support those organizations. And then later, some of the organizations were allowed to sink. So the quality of assets, the mortgage bonds were also a material factor in gathering the strength of the balance sheets of respective banks. Because those banks who have bought those mortgage bonds or bundles of mortgage bonds traded had them in their balance sheets with a deep discount. So what I'm trying to emphasize here is that the money market has to be developed into such instruments as well. Now the last one, bank accepted bills, particularly in Australia, the trade bills. Now, when one business sells goods after producing to another business and raises an invoice, the buyer just merely endorses that I accept it, and the invoice is valid. Then the seller of the goods, company who sold the goods, takes that accepted bill to his banker, and that particular bank discounts that bill. If the buyer of the goods is given time for 6 months to settle the bill, make the payment, the seller's bank would discount it for 6 months until the buyer pays the money. So it is called bank accepted bill. So in the Australian market, in the Australian money market, these bank accepted bills or BABs are a common money market instrument trading amongst the banks, the money market, the wholesale participants. So likewise, we in Sri Lanka, we also could create some kind of money market instruments. The immediate instrument that comes to my mind is, shall we say, take the treasury bills, government treasury bills, 3 months, 6 months, 1 year treasury bills. We could take them, bundle them into certain, say 1 million rupees or 10 million rupees each bundle, and 10 million rupees each bundle, and then sell them in the money market. Because we know that finally the government would definitely honor the bills. The government is the borrower of the money market, or the treasury bill market. So therefore, there are lots of opportunities in Sri Lanka for us to create more and more money market instruments, for which your experience as money brokers also will be very material. If somebody wants to take the lead, take the blessing of the central bank as a regulator, and create an exchange or a debt exchange or something like that, and then start trading these type of discounted treasury bills or discounted treasury bonds and such instruments. Hope you could take the signal that I am giving. Money market is a segment of a financial market in India where borrowing and lending of short-term funds take place. I'm comparing little more developed market to Sri Lankan market so that more ideas could. Now, just a while ago, I indicated to you how Australian market works. Now, this is an Indian market. The maturity of money market instrument is from 1 day to 1 year. In India, this market is regulated by both Reserve Bank of India and Securities and Exchange Board of India, because there is a trading element. Now, we discussed at the outset where central bank regulation is only the deposit takers. When there is element of trading at a price, the Securities and Exchange Commission has to step in. So in India, the money market is regulated by RBI plus SEBI, Securities and Exchange Board of India. But in Sri Lanka, so far, we have seen money market is being regulated by Central Bank of Sri Lanka only. It's true that several department of Central Bank of Sri Lanka gets involved, but the mere level of development in the Sri Lankan money market had required only the central bank regulation, not the Securities and Exchange Commission or any other authority. So it is up to us to create more development, to create more instruments, to create more participants, to create more business, and add variety to the money market. All right, just a matter of 5 minutes more. I want to give you certain logistical problems, logistic issues. By now, you would have been notified by Mr. Chandika Lenage that our scheduled first semester examination for the 2nd of May, Sunday, had to be postponed because the Institute of Bankers premises had been kept out of bounds for students and even for the staff from last Saturday because of some COVID infection detected. And therefore, we are compelled to postpone the semester 1 exam. We will let you know the date on which we can hold the exam. But however, we are lucky that we were able to carry on with the class discussions because we are online. And the assistant directors, particularly Mr. Menaka Vijayadasa, assistant director of the IBSL, was kind enough to take his computer and then routers home when they are required to quarantine themselves at home. He's being able to support us from home to carry on this discussion today and tomorrow and day after as well. And then they had to undergo this quarantine period, mandated quarantine period until early May, first week of May. We'll let you know the first week of May, 4th of May, semester 2 will begin. That will be treasury bills and treasury bonds. The total process from front office to back office, auctions to trading, calculations, and so on and so forth. And that will be conducted by Mr. Mangala Karunaratna, head of Treasury back office of Ceylon Bank. And he will also do it from his residence or office. I'll be also participants to support you and Mr. Mangala. So therefore, only the semester 1 examination will be postponed. All the other conduct of this course, money broking course, will go on as smoothly as planned. Any questions, please? Have you got any questions?
So I have a request.
Yes, tell me.
Sir, these notes that are being uploaded, when we try to print it out and all, the format seems a bit all over the place. Any chance we can have it formatted in a printable manner?
Let me discuss with Mr. Menaka. I think he's also
uploaded
online. He's also online. He can comment if he is listening. But how about those video clips and then web links that I uploaded?
Those are okay. So I'm talking about the printing or printed notes, like the presentation, for example.
So let me discuss with Mr. Menaka.
Sir, excuse me.
Yeah, can Menaka.
Sir, me printouts ganna puluwan again.
ඒක පොඩ්ඩක් alignment upset යනවා කියලා කියනවා කොහොමද මම පොඩ්ඩක් බලාගන්නේ.
සර් ඒක PDF එකෙන් තියෙන්නේ alignment සහිතමට වෙන්න විදියක් නැහැ.
දැන් අර මේ ඕක මේ අපි ඩවුන්ලෝඩ් කරාම පොඩ්ඩක් එහෙම ගිහලා තියෙනවනේ මේනක.
මම ඒක පොඩ්ඩක් බලන්න ගෙන.
අනේ thank you.
හරි පොඩ චෙක් කළා මේක අප්ලෝඩ් කරන අලුතෙන් අප්ලෝඩ් කරන්න ප්ලීස්.
හරි සර් මම මොනවද තිබ්බොත් alignments බලලා මම මේ අලුතෙන් දාන්න.
Right, thank you.
Okay.
Thank you very much for that issue. Any other
Thank you,
issues? Any other issues, please? Anybody else? No? All seems very happy because the exam was postponed. All right. So then we'll meet 4:30 tomorrow, the same way. If there are no more questions,